line expense, we want to take all of the payments that we owe for rent and then divide them by the number of periods we're actually using the asset, and then that will give us our straight line amount we recognize. We've got our prepayment included because that payment, even though it's being made before the lease begins, that is for the period, right? So we are going to remove the tenant improvement allowance reimbursement as well. Remember, that tenant improvement allowance reimbursement, that is effectively a cash incentive for the lessee to enter into this agreement. So because of that, that is going to reduce the amount of expense that I as a lessee have to recognize in my income statement for renting this property. Because again, we are making rent payments, but you could effectively just reduce those rent payments by that 2.3 million. And that's really what we're paying here to rent this space. Gross base rent owed, that's obvious, right? That is taking the rental payments that we made, also increasing those payments by that specific percentage every single year. So the total amount of rent we're going to be paying over the term of the agreement is going to be that $60,634,637. We are also including those gross insurance payments, remember, because we're going to include those as a lease component here. A fixed payment capitalized, the total amount, the 15 grand every 6 months is going to get us to $270,000. All of that added up and netted together gives us $58,924,637. So that is the total amount of money that we need to expense over the term length of this agreement. We already identified that 110 months is going to be the term length that we recognize the expense. So do the simple math there. That leads us to a straight line recognition of operating lease expense of $535,679. Keep in mind, if this lease qualified for either a capital lease or a finance lease, you would recognize both interest expense and amortization expense on the asset. But if it's an operating lease, you are still recognizing a one line item of straight line operating rental expense under both 840 and the 842 guidance. So we've got the straight line expense calculated, and you can see in our 840 amortization schedule, when that lease begins in November of 2021, we're going to recognize that expense in that second column on the left, that 556, 558. That is going to be, or I guess that's before the incentive. And then you see once the incentive is reduced on the right side, that gets us to the 535,679. Now, keep in mind that there are no payments being made in those first two periods because we have not yet begun that contractual lease commencement date. So because there's no rental payments owed, we're going to be capitalizing deferred or prepaid rent on the balance sheet, deferred rent, because we're deferring those payments going forward. So keep that in mind as we move forward here. Now, the liability calculations. So the base rent of $500,000 increasing by 3% annually. Remember, we're going to be calculating this as of the transition date in the standard, right? So rather than calculating this as of November, this will be calculated as of January. So we'll present value to 500K, increasing by 3%. We're also including those fixed insurance payments payable every 6 months, beginning on June 1 and December 1. We use the borrowing rate of 7.2%. That gives us an opening liability as of January 1, 2022 of $44,100,433. Now, there's not really an easy way to just do this calculation on a calculator, right? Unless you're using one of those expensive T9 calculators. But we have linked the present value calculator complementary tool that we have on our website. And I believe the next screen showcases what that would look like if you downloaded it. It's effectively us just putting in those rental payments in the cash column, showcasing how many periods there are, whether those periods are months or years, whether they're made at the beginning or end of the month. And then that's going to calculate at the very bottom what that total present value is, which is that 44 million you see circled there.